What's going on, everybody? It's your boy Drew IQ. Welcome to another episode of Winners Win. Today we're going to be talking about GameStop, ticker symbol GME. Yes, I know this company is really controversial right now, but I'm going to be giving my honest opinions from, someone who's more of a value investor and not really, a retail investor, even though I've experienced with a lot of retail investing as well. So we're going to be talking about, both perspectives that you can look at it from. We're going to be talking about, the financials of this company. We're going to be getting into a deep dive of pretty much, all of the reasons why a lot of these retail investors want to invest into GameStop. And we're just going to be, taking off one by one and just going down the list. And I think this is going to be a video that is going to be really eye-opening and hopefully be extremely beneficial to, both sides of the conversation of should you invest in GameStop or should you not? Is it a good investment? What price target should we buy? And, should we hold it or should we sell? Alright guys, so let's get right into it here. First thing we're talking about is from the retail investor's perspective. Now, I think one of the big things from this perspective is going to be the new NFT marketplace, right? GameStop is trying to get into the Web 3.0 world, right, with the NFTs, the non-fungible tokens, and they're trying to get into this whole space, which I think is actually one of the best things they can do right now. Number one, it's also building that hype, right? Because NFTs have a lot of hype right now. This whole Web 3.0 is very exciting. A lot of people are excited to learn about this and get into this space. So GameStop's building from all this hype they have already on the stock, but also it is a good move for the company to start getting into this digital space, because I think we can all agree GameStop was always this kind of, brick and mortar little go in there, get the physical copies, right? It was really dated. Whenever I was a kid, we would go into the GameStop, actually get the physical copies, look at each games, and it was a fun experience that I think we all cherish as gamers, and that's why a lot of us are probably trying to rally and buy GameStops, because I want to see them win, and I think a lot of us want to see GameStop win, right? But, moving all of this physical marketplace into a digital world is not going to be a very easy task, right? So I think this is going to be the hardest thing to do for GameStop, and going to be, the biggest barrier for them really getting into becoming an extremely profitable company and doing well in the gaming space again, right? So yeah, the big thing for me is going to be, can they nail this NFT marketplace, right? It's not going to be as easy as I think a lot of these guys on Reddit are talking about. Yeah, they have a lot of job openings going on right now. So a lot of these job openings are kind of adding to this hype that's going on. And okay, so they're hiring all these, designers and engineers and a lot of developers to start working on this new whole metaverse and the digital world, Web 3.0, right? So a lot of people have been kind of mentioning this as well on the Reddit post. And I do think that it's a good sign, right? We're hiring a lot of people, we're looking for new people, and we're trying to grow our companies, right? So that is a good look. I do like, from the retail perspective, though, both of those 2 points is probably, in my opinion, the best argument they have right now. I really think if GameStop survives the next 5 to 10 years, that's going to be where they need to focus on, is really that digital world, and can they move from being this physical store to the digital space, right? And that is my biggest problem, because as a long-term investor and looking at companies, I'm always looking at a lot of who is dominating the digital space, right? And in my opinion, there's people like Steam, right? I think the majority of us gamers are buying our games on Steam, or we're buying them on the Microsoft Marketplace. And there's just a lot of competition right now. So I'm a little worried about, GameStop just diving into a digital gaming marketplace. I think they're going to have to find a way to make this NFT space really unique. They're going to have to, somehow make it fun again for us to want to get and go to a GameStop digitally, right? Because a lot of the experience for GameStop was that physical experience. We go in there, you can, return, and we used to go and actually trade in games and get nothing back, right? You trade in a $60 game and they give you $3 back, right? Good times. But yeah, it's a big ask, so it's really hard for me to see them nail this. But if they do, which there is a big chance, because I think a lot of us know, they have been hiring some really top tier tech guys, seriously really talented guys. I think, the CEO now from Chewy, right? He's been killing it. But yeah, I think from a tech perspective, that's going to be their biggest hurdle to really make them a profitable company and do well here in the future. Alright guys, so let's talk about, one of the other reasons why a lot of these retail investors are looking into the GameStop stock. Now, I think the main reason why a lot of people think that, this stock is going to shoot to the moon is because of a short squeeze, right? The majority of times when you hear about GameStop and a lot of these other meme stocks, it's always about, the short flow. The short flow percentage is so high, there's going to be a squeeze here soon. So, yeah, this one is going to be, in my opinion, probably like the main play for GameStop, try and get that short squeeze to happen. Now, the problem with this is the SEC has some filing reports, right? I believe Patrick Boyle on YouTube had a really great video, so go check it out. But essentially what he was saying was that in the SEC, they actually did say that there was a short squeeze for GameStop whenever that, January, the last week of January happened where it spiked. So there was a short squeeze, but the short squeeze was not a big mover as compared to just the retail investors that just wanted to buy and hold the stock long term. So yes, there was a short squeeze, but after that short squeeze was done, the majority of this movement that spiked GameStop was actually just from retail investors on Reddit, just believing in this stock, buying and holding, and FOMO, right? Just fear of missing out, everybody hopping on the train. Now, I find that really interesting because, I think we all thought the short squeeze was actually a main factor for all that spike, when it was actually just a small portion of that actual spike overall, right? Now, when you just think about the actual short squeeze itself, to me, it's like, right now, the short float is about 10 to 14% if you look at the GameStop. And 10 to 14% isn't an extremely high short float. Whenever I was day trading and trying to do short squeeze plays, you would typically look for at least a 20% to 25% short float, right? So I think there's other stocks out on the market that probably have a better chance to actually be short squeezed, right? Another thing that was actually really interesting about this SEC reports was that hedge funds were not significantly affected by investments because a lot of them hedged their short selling by buying covered calls to minimize the downside, right? So yes, there were hedge funds short selling this stock, but these hedge funds were also buying long covered calls to hedge the downside and, kind of minimize how much they were actually going to lose if this, right, they have to cover their short positions, right? So I thought that was really interesting as well because a lot of these people on the retail investor side of things, they always mention, hedgies. Oh yeah, we're against the hedgies. We're fighting the hedgies. But the funny part is there's almost just as many hedgies playing ball with you as they are against you. So it's not really a hedgy versus retail thing at this point, which I think is funny. At this point, it's really just retail investors just going die-hard ape mode and just going all in, like GameStop's going to do this, like they're just crazy fanatics in my opinion, because I've talked to so many GameStop guys and they can't tell you the revenue of GameStop, but they can explain exactly how naked shorts happen. They can explain, travel flow and more. Like it's literally crazy how much other information they know besides, the money, like how much money they make, what are the earnings, what's the revenue growth like, what is the gross profit margins, how much cash do we have on hand, right? Are we a profitable company this quarter? It's so many other things at plays that I never really hear them talk about too much. And I always think that's very interesting, right? We all thought that the main reason for the spike was, the short squeeze. No. The hedgies, no. It's not them either, right? And then also, there was a thing called the gamma squeeze, right? Also, that was proven as false in the SEC reports. So a lot of this stuff that we thought was the reason why GameStop was taken off was all false, right? So I think that's very interesting. A lot of these retail investors don't really understand that, but a lot of them also say, oh, the SEC, screw the SEC, they're just saying that because they want to make it look this way, and it's like all conspiracy, man. Like, people get super conspiracy theory about this. From my history and looking into, my research, the SEC seems to do a pretty good job more often than not. So yeah, take it for what it's worth, but at least that's what SEC is saying. Alright guys, so let's talk about Loopring. Now Loopring is going to be a protocol that is built off the Ethereum blockchain. Now this protocol allows for specific new applications in this DeFi world where they can use smart contracts with multiple different features. We're not going to get too far into the actual technology behind this, but I do think there is going to be a lot of good implications here where the partnership could actually take place, right? Now if you look at the actual source code for this Loopring, on the GitHub page, you can actually see that there's source code mentioning GameStop. So a lot of people are speculating that there's going to be a partnership soon between these two. And I mean, it makes sense, right? With the NFT marketplace, Loopring being this new Ethereum protocol that is actually going to allow them to, decrease the transaction fees by getting more transactions and more power from the actual blockchain itself. Now, I think this is a very good move, and hopefully we get this partnership to actually happen, because that would be a very big thing for GameStop, and that will probably be some news that will spike the price for just a short-term period at least. But either way, I think, them partnering with Loopring would be a good move, and I would have to say, as a retail investor, I would be definitely loving this if they get the partnership. So yeah, good move GameStop. Hopefully the partnership, we will hear about it soon. Alright guys, so at least from the retail investor's perspective, we went over at least all the points that I've been hearing a lot. A lot of people are saying, the sales are increasing, which is also true. These sales have been going up, so that is actually a really good sign as well, right? We're seeing, the NFT marketplace like we talked about earlier. Hopefully that comes into place. We know that crypto e-commerce takeover. Hopefully they get that as well. But really, the one thing I really think that a lot of these retail investors have going for them is going to be Ryan Cohen, the guy from Chewy. He is over here trying to turn around GameStop. I really think this guy is the real deal. And if anyone can really make this company turn around, it's going to be my man, Ryan. Alright guys, so let's go ahead and take a look at the actual financials and, really look at this from a value investor's perspective. Okay, so let's go ahead. First things first, I'm just going to take a look at this last quarter, and we're just going to take a look at some of these statistics here. It looks like our profitability, so our profit margins are negative 2.61% for this quarter. So we're just barely not making a profit. It's not looking too bad, not too horrible, right? We come down here, we look at our income statement here. So revenue, 5.8 billion. It's not bad, right? It's pretty good. Okay, look at that. The quarterly revenue growth. Wow, 29%. That, fantastic. That is what we like to see, right? So this quarter we did absolutely amazing for the revenue growth. Looks great. I love to see it. Love to see it. Come down here, look at the balance sheet. Also, another thing about this company, they have a lot of cash on hand. That is also another thing a lot of retail investors will bring up, right? A lot of cash on hand. So I like the cash to debt ratio. The balance sheet looks really good. So far, not too bad, right? And this is just kind of looking at this quarter. Now, if we go look at the actual financial income statement for the year, so let's take a look at this year, and I'm going to compare it with 2020, 2019, 2018. And we're just on Yahoo Finance looking at our revenues and comparing each year, right? So at least for our total revenue year by year, we've been down since 2018. Since 2018, we had about 9 million revenue. 2019, we were 1 million down to 8 million. 2020, we were down to 6 million. In 2021, we hit 5 million. Yeah, so if you look at this revenue, the only problem I have, right, is that it's going down annually. So every year, our revenue has been getting worse. And this is where, as a value investor, it really scares me. Like I said, we did have an amazing quarter, right, where we had our revenue growth grew the last 29%. So this last quarter was absolutely fantastic. If we can continue exactly how we're doing like this last quarter, then I think we could be on a path to having a really good investment here. But yeah, let's take a look at our balance sheet. Not too bad, doing good, pretty low on debt. Now our cash flow, okay, so our cash flow looks pretty good. Now, one thing about this company is we had about, what was it, 1.7 billion cash at one point, and this last quarter we used about $300 million. So we've been spending a lot of money, it looks like, and I think that's good. You know, a lot of people will be saying we spend a lot of money because we're investing into a lot of new job opportunities. We just hired like 150 new people from across a lot of different tech companies. So that is also true. We are hiring a lot of people, so we are spending a lot of money there. But I guess, you know, the real concern is just going to be, you know, the profitability for this. So our earnings aren't hitting are the right marks, right? We're not hitting our goals. And the revenue growth could be a lot better. So in my opinion, if you just look at this company, at least from a financial value perspective, right, the fair price really is going to be around $150. So if you can get this stock for about $150 or less, it's probably a fair price right now, just based off what we look right now. But if you ask a lot of analysts that use the like discounted cash flow analysis, which is like a very common tool that a lot of value investors use, they'll probably tell you that this company is going to be worth $44, maybe $45, right? So that is why a lot of investors like myself will look at this company. We're going to do our discounted cash flow analysis and be like, wow, how is it trading at $200, $300, $400 when we look at our, you know, algorithm here and it says it should be only $44, or, you know, no more than $44, we should not be buying this company essentially. So that's kind of, you know, I think from a value investor, that's how we're looking at this. It's way high. How is it priced at this? Because the fundamentals don't make sense. So yeah, the fundamentals don't really make sense, but at the same time, GameStop is one of those once in a very rare occasion stock that has a lot of unique opportunity. So I do think with this opportunity, they can really capitalize, and they could actually turn this company around. And, you know, hopefully next quarter we're going to see a much more better earnings report. We're going to see, you know, hopefully better than negative, you know, was it 2.8% on our profitability. So hopefully we're going to see a lot better as far as the numbers goes. But I do think this company is going into a positive direction. And I can see, like I said, Ryan really turning them around. All right, winners. So that's going to be pretty much it for this episode. You know, in the overview, retail investors are kind of leaning towards, you know, the NFT marketplace, e-commerce, Loopring, and a lot of these digital features really keeping this company alive. So hopefully we can see, you know, GameStop do this physical to digital world transformation and be successful, because I think from a retail investor perspective, that is going to be how we win and keep GameStop alive. And from a value investor's perspective, this company seems really out of reach for the current price action, because if you look at, you know, just from the financials, they don't really add up, and they should not be valued at currently what the current share price is. So, you know, I understand both sides of the spectrum, but I am still cheering for GameStop. I am going to be buying some shares, and I'm going to be part of the retail GameStop ape army. Let's go, baby! But yeah, guys, thanks for stopping by, and y'all have a good rest of y'all's day. Please like, subscribe, and leave a comment below.